Good afternoon. Welcome to the weekly livestock market update. I'm Brownfield anchor reporter Megan Grebner. With us, as always, to talk all things markets is University of Missouri Scott Brown. Good afternoon, Scott.
Good afternoon, Megan.
As we get things started today, kind of a short and non-eventful week after last week's big reports. Let's recap what happened this week in the markets.
On the cattle side, cash cattle were $1.25 higher this week. Those feeder cattle markets were anywhere from steady to $4 lower on the week. On the futures side, the August live cattle futures contract was up $1.60, and the August feeder cattle futures contract was up $2. The choice box beef price was up about 80 cents this week, so now that's a couple weeks in a row of some increase, so maybe some better news as we move forward. On the hog side, cash barrel and gut prices were 65 cents higher this week, while the August lean hog futures contract closed down nearly $2. The pork cutout value was also down $1.75 this week on what was weaker ham and belly prices on the week.
Is it pretty encouraging for us to see 2 weeks in a row where the box beef price has started to find just a little bit of support, especially after so many weeks of struggling and declines?
Yeah, absolutely, Megan. You know, I was recently kind of looking at the farm to wholesale margin, and it reminds me it's really wide, right? So we complained about how wide it got back in the worst of the processing slowdown shutdown on the cattle side. But I remind us that it hasn't gone back to the old levels, and that has a lot to do with just the amount of cost as we deal with COVID-19 all throughout the chain from farmer to consumer. And so getting that wholesale price to find some firmness the last couple of weeks, I think at least helps us perhaps see a little stronger farm prices as we look forward here the next few weeks.
Scott, we're going to talk a little bit about slaughter, and we continue to see, at least on the pork side, pre-COVID-19 near or above pre-COVID-19 levels, still running well above year ago. Let's talk first about how those slaughter numbers are looking overall, and then we can get into the why and the how.
Yeah. So let's knock on wood that we continue to see the kinds of changes to the positive in terms of slaughter that we've been seeing. If you look at the data this week, USDA is estimating that we'll slaughter 638,000 head of cattle by the end of this week. That is down 8,000 head from a week ago, but is still 5,000 head above where we were a year ago. On the hog side, 2.543 million head of hogs to be slaughtered this week. That's 40,000 head lower than where we were a week ago. But remember, we had a big run last week. But relative to a year ago, that's up 196,000 head. So still moving in the right direction. The last thing we need at this point in time would to see that processing side start to slow down again, because we still have a lot of cattle and hogs to go.
I know there's still a lot to go, but at least are we optimistic that we're starting to get into that backlog and starting to clear some way that for those hogs that are backed up in the production system?
Yeah, so Megan, I think we have to say we're slowly starting to get ourselves in a better position. Still means we have a long ways to go to get through all the backlog. So I don't want to by any stretch suggest we've somehow corrected ourselves. But when you look at the hog side with 196,000 head increase relative to a year ago, for me at least, it says we're scratching the surface at least of trying to get through some of those hogs. But we're going to have to continue these runs for much of the remainder of this year, I believe, to kind of get ourselves back in a better position.
I think as we talk about the demand part of this, because it is a huge component of what happens with prices and profitability, the Restaurant Performance Index this week shows a little bit of support in some areas, but are we still nervous about what this means for the overall supply and demand picture?
Yeah, so it is an interesting Restaurant Performance Index we got out for June. You know, you look at the overall index, it's actually down 0.4 points relative to where it was in May. But it hides a little bit of what's a current situation index. All right, so quickly, that Restaurant Performance Index has both the current situation as well as an expectations that forms the overall index. That current situation index was actually up 0.5 point relative to where it was in May. And that had a lot to do with an increase in same-store sales that really that current situation index higher. The expectation side, which is what really drug us down, as it fell 1.2 points from May to June. And I think that has a lot to do with restaurant operators looking out there and seeing the increases in COVID-19 cases that have been happening over the last several weeks now, and worried about what the future holds if these cases continue to expand.
We're here in Kentucky and we've started to see a few more restrictions. And I know we're not the only state that have kind of dialed things back in as these cases have gone up, and it has to be concerning, I would assume, for the profitability picture for everybody involved all the way back down the supply chain.
Yeah, absolutely. And I think we sit here as we're trying to get schools back in session for fall in many parts of the country. What transpires in terms of cases as we move forward, it certainly is a very critical time, I think, as you think about if we have to slow or close things back down, what that means for the restaurant industry in particular.
Scott, let's talk world markets and trade as we talk about COVID-19 and the impact of COVID-19. It's not just here in the U.S.
Yeah, that's right. So USDA twice a year gives us kind of this world look at livestock and poultry markets. The July report came out here a couple of weeks ago. It just reminds me to, again, talk about the fact that COVID-19 is not just a U.S. problem, and it certainly shows up in the data that USDA has projected for, and I'll start with imports for 2020 around the world. If you look at, on the beef side in particular, so from USDA's January report to their July report, their forecast of 2020 non-US beef imports fell nearly 1 million metric tons. And when you look at it, it's some of the markets that matter to us: China, Japan, South Korea, Mexico, all showed a downward revision for 2020 imports in the July report relative to the January report. I want to talk about that because it just reminds us that, we always talk about how important trade is out of the United States, or beef exports out of the United States. And when you have a number of these other countries that are also battling COVID-19, it sometimes gets difficult to export more product when you're looking at countries that are also battling COVID-19. The hog side may be a little different. If we look at pork imports, I say a little different, and it's a little different all because of that small country of China. If it wasn't for the increase in China imports from the January to July report, we would be down. So USDA says total non-US imports of pork between those two reports will increase 220,000 metric tons. And that's all because they revised China up 700,000 metric tons. If you look at Mexico, down 285,000 metric tons, South Korea down relative to where they were in January. All of those things just remind us that it's been a number of countries who have seen effects from COVID-19, and pork exports out of the United States certainly wouldn't be as stellar as they are without the growth that we're seeing in China.
And I'm assuming partially phase one, partially African swine fever, and the need to meet their protein needs.
Yeah, absolutely. You're correct. Both of those matter. If we didn't have a phase one agreement, would the Chinese be importing as much U.S. pork as they are? Probably not. However, ASF has certainly played into their need for more pork as well. And the U.S. has certainly been a supplier, and a reasonably priced supplier for them.
Scott, I think before we let you go today, really kind of a short day for us, some interesting stuff happening this week at Cattle Industry Summer Convention, NCBA Summer Meeting and Policy Session. A little bit of a change in direction for policy and a compromise, I would say, from where both parties were coming together to talk about cash trade and transparency and what's going on in the markets.
Yeah, absolutely. So I think you can find any kind of result that you would want as people report on what NCBA did. I like to sometimes remind us that better price discovery is always a good thing. And so if by getting more negotiated trade to happen over time leads to better price discovery. That's good for all participants in the marketplace. When I look at what came out of their work this week, it seems like that's certainly their interest, is to come up with a voluntary method to get increased negotiated cash trade. They will form a working group to make sure that if triggers aren't met in terms of sufficient negotiated trade, that there'll be changes coming down the road. So at least putting in front of them some triggers that have to be met or additional changes coming in terms of more negotiated trade. It is a difficult issue. I go no easy answers, and I'm sure that everyone's going to be looking carefully as we see NCBA work on this issue going forward.
And we'll have plenty of time to talk about that next week, because we have a pretty quiet week again for the first week of August. Can you believe summer is more than halfway done already?
As much as I think at times I was ready to put 2019 in the rearview mirror with some lower livestock prices, I am certainly looking forward to getting through 2020 and hoping for a better 2021, Megan. But it's amazing it's already August, so let's get to the end of this year as quickly as we can.
I'm never one to want to wish time away, but man, this year has been it's kind of a I don't even know. It's a drawing of what crazy thing is going to happen next. We had the seeds coming from China this week, and I'm not sure anybody saw that one coming.
So Megan, I can see when I'm 20 years older than I am today, I'll keep reminding all the young up and coming economists that do you remember what happened in 2020? It will be etched in my memory forever, and I'm sure a lot of folks and those that are just starting won't maybe remember 2020, but a lot of us are never going to forget it.
Scott, next week we're going to talk a little bit about land values and jobs. Hopefully we continue to see some increase and recovery there, because that's always good news. A strong economy is always good news for the livestock sector.
That's right. We need better economic news again next week. So let's hope for a good jobs report.
I'm going to hope you hold you to it.
Okay.
All right.
I'll guarantee it as best I can. How's that?
Very much so. Scott, have a great weekend. We will talk to you in a week.
Sounds great, Megan.
So our weekly livestock market update delivered to your email box every Saturday morning. Visit our website, brownfieldagnews.com. You can submit questions and comments there as well. And for those of you watching us on Facebook Live, send us a message if you have questions and you want to put Scott on the hot seat. It's always entertaining from our end, and always great answers as well. And to check out all the really great Brownfield podcasts, visit our website, brownfieldagnews.com/podcast. Have a great weekend. I'm Megan Grebner for Brownfield.